Jamie, thank you so much for inviting me here to Edinburgh. I love being in the shadow of Edinburgh Castle.
Yes.
You run Codebase here in Edinburgh, the biggest startup hub in Britain, technology startup hub, and the fastest growing in Europe. You can hear the buzz behind us, you can feel the buzz when you walk into the office. How do you do it? How did you make it happen?
That's an interesting one. There's been an incredible bunch of startup activity happening in Edinburgh for a number of reasons. There's a whole bunch of moving parts that you need in any area to build up the sorts of quality companies that we've been talking about. Having people like Skyscanner, who are the most famous company coming out of this part of the world now that post Sequoia investment, they have their $1 billion valuation. That's been a great sort of leading light locally, but now there are a whole range of other startup companies which are really doing very well. One of the reasons for the amount of talent in Edinburgh is actually the university, so they should probably shout about it a bit more than they do, but the University of Edinburgh Computing Science Department is the largest in the whole of Europe by a factor of 2. It's double the size of Imperial in any metric you care to look for. And internationally, it's really fourth behind the ones you may know: MIT, UC Berkeley, Stanford. And really that amount and that volume of talent is just a feeder to me. It's a feeder into all these great companies. So currently we've got 42 companies with over 300 staff and another 30 companies on the waiting list looking to move in. Importantly, I don't care what sector people believe they're in. It's the digital software core of that where the growth is, because we don't have to build a factory with $100 million and in 10 years to create that factory that can make the widgets half a pence cheaper, because of course today our factories are in the cloud and we're using laptops, so it's never been cheaper to build a business. But it becomes interesting then with very small amounts of capital, to be able to build the beginnings of what could be a $1 billion company. And it turns out that we are just great at doing that here. Interestingly, there are differences in the sort of startup landscape in different parts of Europe even. So London is different to Berlin, is different to Tel Aviv, to Helsinki, to Dublin. And what Edinburgh really has in its favour is very much the business-to-business side of software in the web. What we call SaaS businesses, software as a service, and enterprise class businesses. In many ways, the talent coming out of these universities are particularly technical, and so we see an awful lot of cloud computing. We see an awful lot of medical companies doing big data, drug discovery, that sort of thing. When you're thinking about renewable energy, I'm thinking about the software underlying smart grids and smart cities. So it's that sort of stuff when you're thinking about topics like machine learning, artificial intelligence, natural language processing, the big data side of this. And it turns out that Edinburgh's particularly good at that. And so in this huge building that we've got right beside the castle, it's 250,000 square feet. The reason I need a building of this scale is that most of these companies are doubling in size every 5 or 6 months. So it's incredible. There's hiring warfare for tech talent. We've got some of the most amazing stories coming out of here, such as young Ali and Hassan from Plan for Cloud, who were the Scottish fastest acquisition in Scottish tech history. They were only a few months out of the university and they were bought over by the company RightScale in Silicon Valley. They're amazing youngsters, and they've already processed over $1 billion in transactions on their cloud platform.
What timescale is that over?
So it's a couple of years for them to do this, effectively 2 years to really do it, but just unbelievable talent. All the way through to companies such as ZoneFox, who do real high-end security, or looking at your networks and information trying to leak out of your network. So post NSA and Snowden, there's a lot more interested in that kind of technology. Bunch of medical stuff, people doing medical data and drug discovery and so on. We've got some surgeons here called EO Surgical, practicing surgeons who have motion capture technology to monitor the fine-grained movements of surgical instruments as a training tool for trainee surgeons, comparing their movements, and for elite surgeons as well. So there's a whole raft of different technical possibilities here. A lot of financial technology stuff. Edinburgh, clearly there's a great history in what's now called fintech, but those sorts of areas are the ones that I'm particularly interested in.
Very interesting indeed. Now, our members, being canny professional investors, investing both their own money and their clients' money, particularly with clients' money, we'll be thinking about the risks, obviously. What sort of scale of investment involved? These are kind of how long is a piece of string questions. Scale of investment, the risks are obviously probably quite high, but the rewards are equally very
Absolutely,
high.
and that was always, traditionally startups, especially tech startups, has been the riskiest of asset classes. So one of the things that we've been looking at is how can you take some of the risk away while still retaining those unbelievable rewards, not just 10x but 100x rewards if you come in early with the next FanDuel, the next Skyscanner, So clearly it's great that we have things like SEIS and EIS which can just take a whole bunch of that risk away. And we've seen that's been tremendous for the sorts of capital angel investment moving into startups, but it's come with problems as well. One of the things that we've seen are investors who are really using those great tax benefits more for the capital preservation play. It's entirely understandable why one would do that. But that's not why I'm interested in this. I'm interested in doing this to build the next IBMs and the next Microsofts, the next Facebooks out of Edinburgh. So of course we'll use all of these tremendous tax advantages to hose money into startups, but really I want to take the risk away in other ways. I want to build incredible companies. And so what I've been doing here is pulling together the programs with a number of venture capitalists and product managers and software, a really tremendous team that we have here who can take other elements of the risk away by building the components of an amazing tech business. And I think if you can marry up the financial benefits alongside the ability to rapidly grow companies. The interesting thing is that it's never been cheaper to build a company. Even 5 or 6 years ago in software, it would have taken $500,000 plus just to build the technical infrastructure, server kit and all of that kind of stuff, just to get a product out the door. Whereas now, with 20, 30 grand, you can actually build the beginnings of what would be a billion-dollar tech company. Now, many people have bought into this. You may have heard things like lean and agile, and it's just the way that we operate in order to rapidly find out if it's the real thing, or if it's not, you quickly pivot and change, or you kill the startup off, so that you're risking much lower levels of capital there. But the reality is that in the same way that hockey stick growth that everyone's looking for, the same thing happens in terms of follow-on capital. So yes, at that pre-seed level amounts of money with 50 grand, 150 grand SEIS, whatever, very modest amounts of money, if you do it right, you can build the beginnings of a pretty impressive tech company with real traction, with real, monetization and so on. But for them to have the chance of being the real deal, you rapidly, as you move towards that Series A check, you rapidly need to move them to VC. So you rapidly need to go from a tiny amount of money up to what can be quite a large amount of investment, up to 5 million plus. We've seen within the building, the companies have raised $39.5 million over the last 15 months. Companies that have exited me, such as FanDuel a couple of weeks ago, got 70 million, mostly from US VCs, and that's the sort of level that you need in order to really grow the company, really scale that out. But these VCs get it easy in a sense because there's no prize for coming in when it's already proven itself. And so the interesting bit is that early stage money and finding a vehicle where you can spread your bets across multiple companies. So again, the 42 tech product companies we have in here, being able to put tiny amounts, sometimes 10 grand per investor, into a range of these companies, all with the sensible tax benefits, becomes an exciting proposition.
Very interesting. I guess one of the attractions of these new tech startups is, unlike in the old days when Death Valley curve had gone forever for years before a product was either proven to work or was not working and so on. Here it seems to be, you've used the word in the past, sprint. There seems to be a sprint to either success or change direction or decide to move on to something else.
Definitely, and that's why the early stage companies that come in the door with me, the 1 person, 2 person bands and so on, that very early stage level, they get 90 days to prove themselves or they're out. And either we call it pitch, pivot, or push. They either have to be going for real investment, they have to get product market fit early, which means getting it the door and getting it to customers. So this sprint idea is every fortnight they should be launching new software, testing it, trying to break it with their users. There's nothing worse in IT and software than going away and building something in a darkened room for 2 years and then turning it up to the public with it, and it turns out you've built the wrong thing. So really,
which we as Brits used to be terribly good at.
We were terribly good at that, and so being able to rapidly find out if you've got the real deal, and knowing with real numbers if you have or not, getting that early stage traction, finding that sweet spot of monetization, but then moving rapidly to the point where if you need to pivot, and by pivot I mean quite often we've got very, very technical people with technology that you and I could, as they say, geek out about all day, but if they're addressing a market that's simply not big enough, then that's not the real deal. You know, if your beachhead market is less than £5 million, then that's the wrong startup, that's the wrong market. So being able to change those ideas and pivot into what is a much bigger market, that becomes interesting. So for example, one of the great success stories here are FanDuel. They began as HubDub, and it was an analytics tool actually for the financial services, and it just didn't work for reasons that are too boring to go into. It was the wrong thing. The technology was incredible, but it was not right in terms of that market. The day they pivoted into fantasy sports with the NFL, American football, the day they pivoted, they were making money, and now again they've just had that 70 million investment. They're doing incredibly well internationally, based on that core technology, but having that cleverness to rapidly spot a market that this technology could address that was huge. And to be honest, the reason the VCs are all over them is because they have less than 3% of the US fantasy sports market, with all the amazing money they've already been making. So that's the sort of story, and that means it's also absolutely true, we're not going to get those year upon year upon year upon year of follow-on VC before you find out a way to monetize. So the Facebook and Twitter model, forget that. All of the companies here have to be down at the other side of that graph, which means they have to monetize early, and they absolutely must get early traction. People who are using that software need to be getting excited about it, and they need to prove that rapidly. And that's something which takes some of the risk away from the capital as well, when you can take amazing founders and use a rapid process to find out the market for them to address that's really going to be colossal. You've got a chance.
Jamie, this is fascinating. I don't want to steal your thunder for the talk you're doing for our members shortly in London. We hope elsewhere in the country as well, but we very much look forward to it, and thank you.
Fantastic.
Great.